Hey traders, welcome to another free video analysis ahead of the webinar that we will again have it on Monday at 15 Central European Time. So make sure to subscribe to our YouTube channel and you will be notified when we are ready to start. Okay, so the US dollar is still in uptrend. It remains in uptrend despite Powell comments yesterday. He said that increase in bond yields was leading to more restrictive financial conditions, and this could potentially impact monetary policy. Of course, this means that economic activity is slowing down, but still their main goal is to bring inflation back to 2%. But not only that, we have also now new geopolitical issues, which is another reason why the US dollar is still trading to the upside. Now, looking at this chart, I think that as long as we are here above these March highs, which by the way reacted as a very nice support here a few times, so as long as we are above that level, I just think that this consolidation still can be potential wave 4. Okay, so in other words, this recovery can still continue into wave 5. But if suddenly, let's say that I'm wrong and market comes back below 105.50 or even 105.00 level, then I think that top will be in place and then I could focus on more potential weakness. But for now, I still think we have to respect what the market is doing. Investors, speculators are looking for some safe haven flows, especially after these recent events, and ahead of the weekend I'm not really sure how many investors will be looking to take the risk and maybe sell dollars and buy stocks. So in my opinion, there is even a chance for stocks either to stay sideways or even can be looking lower. I mean, German DAX is definitely, or stocks in Europe are definitely not looking good. So I'm wondering what will happen in the US and how the market will close today, because it's end of the week. So if dollar will continue to see more gains, of course, I think that the SP 500 could also be pulled a little bit lower. But for now, I have to respect what the market shows us. For now, we still have 3 waves down. So as long that's the case and as long we are holding this 4,240, there is a chance for a recovery. Okay, but to really make sure that we are back in risk on mode, you firstly have to see dollar coming back towards 105 level, and you have to see this 44.20 resistance being broken here, which was, by the way, high from a week back. Okay, on the other side of this, if suddenly, let's say, we break these previous swing lows and make even an overlap with 41.70, well, then this current impulsive bullish interpretation, or I could just easily say this uptrend, will be invalidated. Okay, so in such case, watch out for this potential scenario. I think that then this wave 4 or this correction that is already in place from end of 2021 could become a much more complex, and then I'm afraid we will be seeing something like this, like a big ABCDE triangle, maybe even like a deep flat correction. So the important is to keep an eye, as I said, 41.70. This level is overlapped, then this overlap will confirm the rally in 3 waves, okay, which will then be tracked, will be labeled as an ABC formation here, up from October 2022 lows. So we had a pretty nice recovery, and if this level is overlapped 41.70, then I'm afraid we are going to see something more complex here. But as long as this level holds, and if we break 44.20, 44.30 as I said, then I still think there is a chance for this recovery to resume. But as I said, also keep an eye on the US dollar. So no matter what's showing us picture of the dollar or the S&P 500, so investors are looking for safe havens, and gold is also one of it. We have been tracking this bullish pattern for a while. It's an 8-wave cycle, and we are seeing a massive break to the upside, very strong move. So clearly I will be looking for more upside. Even I'm targeting new all-time highs on gold, but of course maybe nothing will happen in straight line. There can be some pullbacks, and if you look closely here, maybe on the 4-hour time frame, you can see that we are now approaching this resistance going back from July of this year. Okay, so maybe we will see some slowdown here, and then potential supports could be found here at the previous swing highs, which by the way here did not act as any kind of a resistance. So now when we broke this, could actually become a very nice support. Okay, so let me adjust this into the support. Okay, so watch out for this potential level to be the next bounce zone. Okay, so traders, thank you very much for your attention. Make sure to check our webinars and join us in our live session on Monday and at 15 Central European time. Traders, trade well and talk to you next week. Bye.